Euro pound. Now, it's quite interesting, this euro pound, because and the euro pound is pretty smooth. It's a nice pair. It's a nice pair to trade. And what we can see here, I mean, this is just, if you want, if you want a perfect example of how to trade two structural failures and take a trade to the long side and the short side. I mean, you've got it here in perfect formation. You've had here, we have a structure within a bigger structure. The perfect trade to the long side, from 84. You remember, guys, we had that. And also you remember the relevance of the 84 is here, this standout low at 84. So we've got this standout low here. This was a momentum low. This was a failure to make a low. So you've got one structure there. And then you've got another structure here. Another failure to make a new low. And we have a structure here. And this structure matches the big level of 84 back here. You don't need any more than that. That is just the simplest of trades. It's beautiful. You take the long there. Thank you very much. We have the push up here, all the way through to 89. Again, failure to make a new high here, which renders this the structure if you weren't already short at 87. And thank you very much. We get a push down, and we may even get back to the 84. Very simple, very effective, and that's why we have to look at it. When something behaves according to according to price as we understand it, you can't ignore it. So we're basically now sandwiched in between two structures. To the long side, we've got our structural long, therefore, at 85.30, and we can be very confident in these because the market has shown us, how important they have been through its behaviour. 85.30 is your structural long, very simple, and 84. I mean, it's 83.998 or something like that, but let's call it 84. And 84 is your structural short. That should be obvious. And however, if we trade down here and we hold and we get support, you buy that with your stop the other side of 84, and you're off to the races. Okay, so that's your long and short. That should be nice and simple. Go 200 tick and see what it delivers us. There's your structure up there. Your long, okay. Your earliest long here. Your earliest long is the we've had a low here, a failure to make a low, within, the small picture here. You'd want a break of the range, and then you're looking at the move above here. So 84.94. 84.94 is your long. That's your earliest chance of a long, but bear in mind you haven't got that much room till we get to 85.30, but it's a good enough trade. So your 84.94 is your long. If you're long there, your stop is going to be back below is the 1-day low. So your long stop is 84.77. Okay, your long 84.94. Your stop is 84.77, the 1-day low. On the short side, well, that has to be technically speaking, it's this point here, but you might as well wait for a 2-day and a 3-day low to break. That is 84.50 then. That's 84.50, and bear in mind where the structure is. The structure is only 50 pips below that at 84. So those of you with a bit more of a those of you that want to take the bigger levels on both of these to the upside and the downside, you could wait for the larger structures. But if you're going to take the short here at the 2-day and 3-day low, you can have your stop pretty tight. Let's 84.60. Your short stop is 84.60 because it accommodates these two lows and this low here. Okay, it looks like that's where it wants to go, but a quiet day really in this euro pound. It's a stalemate. So 84.60 is your short stop. Okay, that's fairly straightforward. Let me save that.